Good morning, everyone, and welcome back to this new appointment with the morning briefing. Let's get started right away. Today is Friday, March 28th. From Margola's perspective, there's the personal spending index just before the opening of the American markets. In short, this is the only significant data of the day. Then there were some data for the UK, for Great Britain for the morning, already released today. So the focus for the day at the moment remains on that data at 1:30. Besides this, the situation seems to have resumed its course. Yesterday was a day, let's say, of a range where trading was up and down on the levels reached with the decline of 2 have Wednesday. So we worked on these levels essentially within the BC3D levels yesterday. These are obviously updated for today. And this told us a few things, essentially that the downward wave is absolutely not completed. Even this morning, the price has already moved below SD1. We are working below the range of the BC3 levels, both yesterday's and today's. They are all concentrated here. So in this area here between RD1 and HV, which has already broken and is moving. In short, it's moving quickly. So absolutely. Day to handle with care. Remember, it's Friday, so protect your financial capital, your psychological capital. We don't have to do everything today. So maybe a reduction in size. In short, be satisfied with what you can achieve initially, and that's fine. You close the day, you close the week. And on Monday, we start again with a new perspective, with a more positive attitude, certainly. That said, as I was saying, from an operational point of view, the situation is manifesting, in short, the one we had described. We put up an hourly chart. We outlined the scope, these levels, where we were expecting a resumption of sales that has occurred at the moment. In short, we have returned almost to, let's say, the peak of this range, if we can put it that way, or in short of this pattern that had formed as per the strategy. 1234 in pivot, in short, has been broken, tested. It had started, now they are returning to retest. So this moment certainly represents an important anchor, a level that will probably be defended by buyers. But be careful, because the volatility and pressure are absolutely bearish at this time, so they could easily break and push prices even lower. Moreover, today is Friday, with all the geopolitical risks and conferences and Giga's interviews might happen or statements released can stir things up. So operators tend on Fridays, in this period of great uncertainty, tend to stay liquid to reduce market exposure. We'll see, in short, what will happen. So let's not, in short, we don't predict anything. It could also, in short, just do a test and start rising again. On this, I can't know at this moment. We always evaluate what we have in front of us at the moment. For me, it's perfect. Having said that, for the NASDAQ, obviously, it's a similar situation. For them, at the moment, we are exactly resting on the level indicated yesterday, 57.15, more or less, which then corresponds in short to SPX. I think it was 5.5, 665. I'm going from memory at the moment, but I'm not sure if I mentioned the correct levels. However, you can review the notes from yesterday where I highlighted them. 5.715. I remember this for ES because I work with futures, so I memorize these levels. And so, as we were saying, the moment really settled there in that area. It bounced back. Not much. These are the first moves of the day. The European market has just opened 10 minutes ago, and so it's definitely a day that's taking a decidedly bearish turn. I repeat, we'll see. At the moment, even Esser is working on SD1, which roughly corresponds to that level of 57.15 that I had indicated. Pay close attention, guys, because a significant bearish wave could start from there. Today, let's not say, hey, I can't give certainties, but the market seems to be leaning towards this. Then we'll see still all highs and lows. You see they are growing and decreasing. In short, this wave starts here. Then in short, it recovered a little bit of maximum erosion. In short, yeah, it seems to me, it seems like a path recovery to the downside. We'll see. Maybe there could also be a new test of this area here, of these lows here. So maximum attention, also because maybe, as I said, there could be some statement that completely overturns the situation. We said we are working in a binary market, so we must be ready to change. Of course, within the span maybe of an hour, half an hour, because the market is so volatile that it offers opportunities in both directions. Okay, having said that, let's move on to the Dow Jones. Here it is. He arrives. Perfect. He is also working on the SDR levels. Just leaning here where there was the gap left open at the beginning of the week, which is still open. They might also close it and then start again. In short, I don't rule it out. It was sometimes. In short, a modus operandi of the institutions. In short, the little channel here, in short, I don't draw it, but in short, it seems quite evident to me. This could be the landing point to then maybe start again, or here maybe return to the range of last week, and maybe, well, it depends on how the day develops. In short, taking shape, a review obviously upwards, a break, there you go. Breaking this BC3 level with strength could certainly give, in short, a marking of this so-called double. Maximum, in short, relative to these two peaks here for an attack right at the peak area, which then represents this zone here. In short, this is a scenario reversed to the downside, obviously to the downside. At the moment, in short, it seems unnecessary to even say we are right supported on SD1 on this, let's say, range that has been created since Wednesday, after Wednesday's drop. In short, we are working within this range. The break of this level, in short, certainly here too, in short, cannot provide momentum and retests without, in short, being significant. The same thing, of course, happens on Russell. Here it is. Culpability intention. We are on SD0 here. In short, however, even if the crucial level, I believe, is clearly SD1, to the downside, obviously to the upside, 200 RD2. The area we mentioned yesterday. In short, this 200 in short remains because essentially yesterday, in short, nothing happened. There was a bit of up and down. In short, a smudge below the C3 levels, a smudge below, in short above, but essentially. Then it returned to that range. Okay, let's take a look at the DAX. Here it is. Here, at the moment as well. In short, the market opened 15 minutes ago and was right at the low level of the BC3 range on SD1. A break, obviously, in short of these lows here. So 22.7, which corresponds more or less to SD2. Therefore, a break of SD2 could certainly provide a new bearish push. Also, on the DAX, which remains weak also. As the volumes have not been excessive in recent days, it has shifted a little. The focus, as we have often said, has been very popular, in short, initially, precisely because of the rumors that accompanied this recovery plan. More than the recovery plan, this amendment to the Constitution, which therefore allows governments to exceed spending. In short, it had given a nice bullish push. To the DAX, as we have repeated several times, it has outperformed. standard and by about 25%. In short, now it's pulling back a little precisely because volumes are decreasing as the interest from institutional investors is waning. Since the main event is done, we'll see what will happen. Let's not, as usual, take a look at commodities. These have left that channel I drew yesterday in the morning briefing, obviously without being able to adjust it, because here in short, we can certainly extend a parallel line, okay? A lower parallel line. To me, it doesn't seem parallel. In short, let's take this minimum here, so pay maximum attention here as well. Return into the channel in short, into the upper part of this channel in short that we have drawn, even if in short not very precise. I should put myself in short, work in short, with the data to be able to draw it more or less precisely. In short, this is the idea. So a return into this channel could definitely push prices into the 71 area. There might also be a new test from below. Then essentially a construction of its own with a break of this, let's say, parallel that we have drawn, and it could essentially test this area. Here, it indeed corresponds to this minimum. Here, with these highs, so definitely 68, 80, 68, and 70. It could be a landing area where essentially if this were to be broken on this unnecessary channel drawn. Let's look at a situation where today essentially the San Pino contract is involved. So we have moved to the June contract. So regarding them, we have discussed, we spent many words even yesterday on trend, which is clear, evidently obvious to everyone. So it continues to rise, it continues to march. I remind you that we have, let's say, as a target for that third wave that we charted a few days ago. In a morning briefing, it was 3,080. So at the moment, it has reached 3,125. We are still a bit far. Maybe we put a nice trend line with a horizontal follow-up. All right, the same good. Here it is. This should be the final target of that wave of the third bearish wave, Valenza, 3180 in Alberghetti. Let's say that the third bullish wave completes with it because we had drawn the sum with some amplitude. In short, on the chart drawn a few days ago, in short, I think last week it didn't work for me. I remember it exactly perfect. Kids, take a look at SPX. In short, what, and now even here we have, in short, we have drawn this little analysis. You see that we have broken it. We are working below, in short, probably. With the opening, we will work around it again. Unless, in short, the market takes a directly bearish path and there could be a downward opening. However, in short, this is the level now in short to monitor because a client in the channel could, well, resume that recovery momentum that was there. But obviously, if it does not re-enter the channel, it's likely that it could continue this wave, bearish. This is still a 4-hour chart. I haven't shown anything. If I zoom out, here it is. This is the long-term chart where I haven't touched anything. It's been like this for a while that we've been following it. And this is the situation. So this could be framed either as a substantial recovery that could also bring prices up. In short, where the trend continues. Or obviously an exit in short could easily bring prices back down. Here, perhaps even a test of this level that we had, drawn at 5, 4, and 30. It might not happen in a single day. But in short, as a target, it could certainly be achievable. Perfect. Having said that, as always, I invite you to leave a like on the video. We'll catch up later in the chat. Thank you all for your attention.